Hey guys, Jose Martinez with Centric Mortgage Team. I am with Groves Capital out of San Diego. I am a loan originator and I just kind of wanted to share some thought about San Diego's current market and what's going on. Basically, going off of how rates have gone up, right? And there's more inventory showing up, and what's going on? People are not buying, or you start to wonder, like, what are people's thoughts, right? Well, what I wanted to highlight on is the fact that the rate really plays a part in the pricing, right? We know that if rates go up, housing prices should come down. Should being the key word. But I just want to share with you some calculations I did today that kind of surprised me, actually. I went ahead and I punched in what a loan would have been a year ago. Let's say a $747,000 loan. Let's just say 4%, right? And what the payment would be. And then, I calculated a loan at $647,000 at 5.5%, basically reflecting what today would be. That's $100,000 difference. The rate went up, boo-hoo, right? So I wanted to tell you that the payment's the same. And you go, well, sure, yeah, but you were paying for more house, before, or a lower rate, right? Well, what's happening now is, since the rates have gone up, people have slowed down on that desperation type of purchase, and they're more methodically thinking, what are they going to buy? And that seemed to have sparked an interest in sellers thinking that we've peaked. We're headed for recession. It's proven. We already know. But housing isn't going to be affected so much, right? So we started to figure the payment's the same. And you're probably wondering, like, Jose, what does this matter, right? Okay. Well, housing is going to start going down in price because there's more available inventory. All the people that are sitting on their houses are thinking, well, I better sell before they drop too low. Or even the investors out there that had put in that same house they bought a year ago, they were trying to make, 100,000 extra or something. Those prices are going to have to come down. They're going to have to sell, right? Those flippers, they'll have to pull out because they're going to give up some of that large profits that they thought they were going to have. They don't want to lose money, right? And the reward on that is you're going to get all the renovations that you didn't get a year ago, right? You would have bought that same house a year ago. You would have had to done all that renovation and pay $50,000 over asking, right? So you start to wonder, what are people thinking? Like, would this not be a good time? Let's keep in mind that rates can potentially go down someday down the road. It's going to give you an opportunity to refinance, get that payment lower, right? But if you had paid a lot more for the house like a year ago, it's not likely that you can get a lower payment because you already have a lower rate from a year ago. With the inflation the way it is, I just don't see the house prices going down to levels that we've seen in the past. Sure, they might fluctuate a little with the rates, but not like we've seen 15 years ago, 20 years ago. What I will tell you is the difference is minimal. Don't focus on that rate. It's not really important. Yes, when it was low a year ago, you could have gotten a great rate, but guess what? You would have paid a lot more for that house that you can't change the price on later down the road like you can the rate. That's the message for today. Happy hunting. Hope you get out there and just make a change. Make that purchase. Don't be afraid, right? And we're here to help. Call us 832-BUY-1, 619-832-BUY-1 here in San Diego. You can reach out to me or Marvin. We are the Centric Mortgage Team under Groves Capital in San Diego. Hope you guys found this video informative.